Sir, shall we start now?
Yeah, we can start.
Okay, great. So, first of all, thank you so much for coming to my space, Prakash. And guys, let me take a moment to introduce our guest for today. Very warm welcome to Prakash, sir. And he is MD and founder of Plutus Advisors, a SEBI Registered RA. And for over 2 decades of experience, sir is known for his clarity and time and again he is so vocal and helpful for the retail investors that in the time of doldrums he is always there so as to guide what is happening in the market, and his advices are always backed by the experience and data. So a very warm welcome, sir. I would request an opening note from you and your market view and budget view. After that, we will take questions from the attendees. Yeah.
Thanks, Prince, for the lovely introduction. So I have just, like a few days back, I shared my view on the budget and market outlook at 17,500. Nothing much has changed after that. So Nifty has rallied some 400, roughly 350, 400 points after that. And budget was good, right? And they did some big bang thing for the infrastructure and a capex related story. So overall, nothing much to talk about the budget. 1-2 sectors they did some negative, which is insurance, which is clearly basically the life insurance sector. Rest everything is good. No major change from the budget side. They are continuing with their old policy related to the infrastructure, and they want to invest and everything. So absolutely clarity from the budget side. If you ask me how much score I will give out of 10 for this budget, so it is around 8.5. So good budget. And in terms of market, I would say, this market is relatively in last 17-18 months is cheaper, right, as compared to if you go back and see the price action and the overall valuation matrix of Nifty itself. Nifty was much more expensive than right now, right? So right now in last 18 months your earnings has gone up by 20%, Nifty earnings basically, and Nifty is almost at the same place. So optically Nifty may appear that the Nifty has not corrected much and it is at the same price, but in earning terms Nifty is 20% cheaper, right? So in last, if you go and check, so let's go and see. Let me open my Excel sheet. So I'll go and see the Nifty EPS of October 2021. So it was roughly thereabouts. Basically, I will see the November, because by November almost all the Nifty companies reported the numbers and everything. So in November, Nifty EPS was roughly around 720 rupees, and right now the Nifty EPS is roughly around 860 rupees. So roughly a increase of 20%, and Nifty is more or less at the same price. So if you see the in terms of Nifty PE ratio and all those stuff, Nifty is 20% cheaper. And second thing is you have already passed the time correction of 18 months. So these two things are favoring you, and I don't see much of a downside in Nifty from here on. So what can happen from here on is you may retest your September 2022 lows, which was around 16,700, 750 thereabouts, and that will be a very good buying opportunity for the investors. Why I am saying so, and the reasons are following. Why I am not seeing a big downside in this market, and reasons are following. So the crude is already at $80, which is a big positive for India. And if you see the rate of change year on year in crude, which is almost flat, so it is not going to hurt your corporate margins and corporate earnings going forward. Most of this $80 is not going to hurt in next 2-3 years because of the base effect. And the second thing is banks are just reporting absolutely fantastic set of numbers. So you must have seen this SBI results, and then you must have gone through the Bank of Baroda results, and HDFC Bank, again super set of numbers, ICICI Bank. So banks are reporting earning growth of anywhere between 17 to 20%, which is 50% higher than India's nominal GDPs. So our nominal GDP is roughly around 6.5% inflation, 6% is GDP, which is roughly around 12.5%. And banks are growing at the rate of 18 to 20%. So just imagine, banking is one of the biggest sector, having 30-35% kind of a weightage in Nifty, roughly thereabouts, give and take 2-3% here and there, and which is firing up big time, and it will help Nifty to improve the earnings going forward. So banking is doing well. Auto is already doing decent, okay kind of a number, not causing any damage to the Nifty earnings. And third sector, again, a big sector is IT. In IT, what is happening is maybe the next quarter will be little muted, but in the certain, I see certain pockets of Europe is now coming back, right? And US is not doing too badly. So maybe after 1 quarter of a dull earning, the next one, and after that, IT will be also start picking up, and which will add up to the. So I am talking about the fundamental side of the Nifty, and the earning pictures of Nifty is not compromised as of now. And if the earnings are not compromised, chart will sooner or later, charts will follow, right? Or price action will follow, because my firm belief is in long term, charts oblique, price action is totally slaves towards the earnings. If the earning is good, the price action and charts will improve going forward. So, and in terms of technical, if I say Nifty is taking support around EMA 200, continuously taking support around EMA 200 on closing basis. So this is the one positive I see. And then I see on derivative side, if you go and see I don't know how many of you see this long dated options contract, right? So I see it very closely, and I see a lot of concentration on put OI, basically on the put side at 17,000 and 16,500. So the big money is and when I say big, not really the FIs. These are basically the professional players on the option side. They don't see market going below 16,500 for longer period of time. So they are selling long dated put options at 16,500 and 17,000 strike, and they are basically the market makers. So they know that the market will not fall below this particular point, right? Big time. And in terms of FIIs, so F is done, fundamental I have covered, because our earnings is not going to compromise, so market will be fine. Technicals, we are taking support at 17,300, 17,500, EMA 200 levels on closing basis. And derivative, basically we are seeing a long dated option writing on the put side at 17,000 and 16,500. So derivative is also done. And now, so basically I am covering on the basis of FTDB model. So F is done, T is done, D is done. Now big money move. FIs are selling into the Indian stock market, and the reason is absolutely correct, because our valuations were a little on the higher side, and Chinese stock market valuations were really on the lower side. So and they went really underweight on Chinese market. So now they are correcting it. They are selling some equities and doing some profit booking in India, and they are moving that money to Chinese market. So that is absolutely fantastic. But I see some kind of a desperate selling from FI as well, and I clearly see desperate selling from the FIs as well. And many other times I have pointed out with my tweets that whenever the FIs get desperate with their sellings, they normally get it wrong. I proved this theory at 15,400, 500 last year in June with all of you, in front of all of you. I told you that this selling is a clearly when they were selling 1 billion or maybe 6,000, 7,000 crores daily. Then I clearly told you that they are getting desperate to bring down this market, and chances are the market will reverse from here on. And right now what I see is they are doing some kind of a reverse arbitrage activities also. So what they are doing, they are selling in cash and trying to cover their short position in future markets, so they get the future contracts little lower and they make money in future segments. So this is one thing which is going in with the big money move. But I personally, if you ask me, with all this experience and everything, the moment Nifty close above EMA 63, which is roughly thereabouts 18,000, 17,000 Let me check it out. Nifty EMA 63 below 18,000. Let me see what is the level. So right now the EMA 63 is 17,989, or let's say rough number 18,000. The moment Nifty close above 18,000, FIs will cover their shorts and they may go long on Indian stock market, right? And they may go long big time. So you have to keep this number in mind, 18,000 on closing basis. If Nifty managed to close above that, as a trader, you may get a very good rally of 600 or 800 points in no time. So keep this number in mind. And rest everything is fine. Yeah, Indian market is doing well, right? So this is I don't see. And one more thing, right? This market may remain sideways for a couple of months, and the moment you hit 20-21 month in terms of sideways market, a lot of value will emerge. This is my, I'm telling you, this is exactly like 2011 2013 sideways market, right? So I have I was there, I was making portfolios, and the portfolios were not doing well in that period of 2011 to 2013. So I know how to deal with these kind of markets. I have dealt in the past, and I'm pretty confident all of you will learn in this period that how to deal with sideways market. So market may remain sideways for a couple of months, and after that my base case is it will break out on the upside. Prince, so that done on the market outlook. If you have any query, you can ask Prince.
Yes,
Or
sir. Thank you.
Shashank ji, you can ask her, please.
So, Prakash, good to speak to you again. Thank you so much for your wonderful views. Uh,
Same
my
here.
question regarding to the budget views that you had, that you were bullish on the capex and infra. So, where do you
Mhm.
see, like in the infrastructure sector, which are the sub sectors do you think it can attract capital and have the ability to do good going forward?
So uh, basically, I'm buying companies related to the road, basically. So the companies which are involved in road construction and all. And second is cement, right? So cement, I'm really bullish, and I see that the cement companies are relatively, the balance sheet managements, all these things are quite good, and chances of accident in cement sector is very less. So cement and road construction companies, and a couple of capital goods companies, but again no, very small companies, so I don't want to name them. So capital goods, cement, and third is road construction. And again, you guys know that I'm bullish little bit. I'm bullish on railway sector, so I'm buying some wagon companies and some railway infrastructure related companies. So these are the four things right now I'm focusing on. And maybe once we are tracking 1-2 ancillaries plays as well. Once we finalize the stock list, maybe we'll try to speak on Twitter about that, but not the stocks, but sector surely will try to highlight.
That's perfect. So, just one question, since you think you publicly also spoke about, so since then I'm taking the liberty to ask you, sir, this Ambuja cement that we currently have.
Yeah.
What do you think? I
Yeah.
mean, in terms of this the amount of capital they need to expand
Mhm.
their capacity. So, where do you
Mhm.
think? I mean, where would they get the capital from? Because my thinking is that if the group is under stress. Uh,
Mhm.
then the external capital can either basically come from by selling off the entire business or by
Mhm.
any other Adani business. So what do you think?
Mhm.
How are you thinking about this?
Actually, if you are bullish on India, you have to be bullish on infrastructure going forward, right? Because whatever you reached $3 trillion without much of the infrastructure, right? From 3 trillion to 6 trillion or 7 trillion in, let's say, 5, 7, 8 years, you need to build the infrastructure, right? So I'm sure Mr. Adani is very much focused on these two cement companies because he wants to participate in India infrastructure growth story and in India growth story. And I hope you guys have gone through this Adani transmission number, right?
Yeah, multiple
Right. So
numbers. Yeah, got.
yeah, so very good numbers. And because of that, what will happen is their interest coverage ratio will improve. And slowly what will happen? They are going to report, I'll be able to answer this question very efficiently after 1 week. because by then all the Adani Group companies will report the numbers, right? And they will give some kind of a commentary as well, right? And if you want to understand the Ambuja future plan, I think they are going to do the con calls in couple of days, if I'm not wrong. So let's hold this thought for let's wait for 48 hours. I have the answer towards it, but I want to hear the management, right?
Right. No, I think
And
that makes sense, complete sense.
yeah. So let's 48 hours. Let's wait for 48 hours. I have my personal investment in this company and Adani Port, and we are making money on both the stocks, right? So we bought in this fall, and I think Adani Port did upper circuit. I think, if I'm not wrong.
Yeah.
10% up, right? And I give this call to all my subscriber in the morning as well about the Adani Port, right? Released a small WhatsApp voice message. And the idea here is, right, this port and cement business is absolutely fantastic. Absolutely fantastic. And a lot of people think that they have a lot of debt, but you cannot build a ports and cement business only via equity, right? You need to take a lot of debts because these are high capital intensive industry, right? So just Shashank, just take an example. If you go and try to buy a flat worth 5 crores in Mumbai, you do take loan of 3.5 crores, right? So if you are not able to buy 5 crores rupees worth of flat from your equity or from your savings, then how you assume that the person can put a cement plant with such so much capacity with total equity, right? So these ports, cements, they have to take debts. And trust me, I'm not more wiser than Mr. Adani. He must be having some plan.
Yeah.
He is having a track record of 40 years to build the businesses, and he right now he's owning really great strategic assets like airports, ports, even certain contracts on the electricity and transmission side and green energy. I think he will get investors. I'm pretty sure in next 10-15 days after the results, you will see some big sovereign wealth fund or some big fund will come and buy into maybe Adani Enterprises or some of his green energy projects. So he will get $3-4 billion. Mark my words, in 15-20 days.
I think
This is
exactly my.
yeah,
I mean,
and that will solve almost all the problems.
I think I completely agree with you. It's just that the uncertainty that the market in the short term that created, that was the
No,
bag.
that is a opportunity for people like us,
No,
right?
I'm
So
personally, just
you will. I don't buy Ambuja at 600. I will never buy, right? I may buy Dalmia Bharat at 1800, right? But I got the chance to buy Ambuja at 320, 330. I bought it, right? So these kind of uncertainty do provide you the opportunities. But I am not bullish on the total Adani Total and all. But I am bullish on these 2-3 companies. They will survive, and trust me, Adani is not gonna default. I have seen so many companies in front of my eyes going bankrupt, like Lanco Infra, Bhushan Steel, Bhushan Power. List is endless. I have seen 200 plus companies, high capex companies going bankrupt. But the best part with the Adani group, I have gone through all the details, right? They are getting they are only paying 6 to 8, 9%, maximum 9% on their debts. So their interest cost varies between from 6% to 9%. So I think this is quite manageable when everything is in terms of interest cost is going up. He will be able to manage it. I'm not favoring him. I'm not if like I'm not investing in Adani Enterprises or Adani Total Gas, or I'm only investing in port and cement business.
I
That's
think
it.
I completely agree with this point of view because I'm personally invested in Ambuja Cement also, just as a distributor.
Yeah.
But yeah, I mean, I hope this thesis plays out and he raises money from the other assets, and which is pretty easy because the kind of assets he's sitting on, these all of them are cash generating mostly, apart from the renewable ones. So yeah,
Yes.
let's
Yes.
let's hope for the best. So my second question is regarding the IT. So IT sector, if we see, the recent unemployment numbers coming from the US, so they are,
Mm-hmm.
they're, I mean, unemployment to छोड़ो, they are adding jobs. So what do
Mm-hmm.
you think? I mean, यहाँ से if just let's assume that the Fed again goes on to increasing the rates and doesn't stop, and the Nasdaq takes a back route. Do you think we can have the repercussions on the Indian IT, which is, I mean, showing the strength currently?
Actually, if you go by the last statement of Mr. Powell, right? He clearly mentioned that he sees a lot some deacceleration in inflation, right? He clearly mentioned that in his speech, and after that he said all the blah 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 that we will keep rising rates if the inflation don't come down, right? So you have to understand this IT is also gone through a lot of time correction. And in my entire research, time correction is one of the biggest factor. So if any stock which gives you, let's say the stock like Infosys, in 2 years time frame, if it gives you zero return, and if the earning is growing at the rate of 8 10 even 10%, let's say close to India's nominal GDP, or 10-11%, it will become automatically a value buy. Why the value buy? Because the interest rate is going up, so the cost of capital for the most of the companies are going up, right? And here is the company which is sitting with a lot of cash, right? And it may surprise you with a buyback, it may surprise you with a dividend. So normally I'm not saying they will go up by 20-30%, but chances are they will be a market performer. And you want to invest in some cash rich companies as well to manage your I'm talking from the big fund managers point of view. I'm not talking about like retail audience. So what how the big fund managers manage their portfolio volatility, to just buy into the cash rich companies. And a lot of passive flows will come into these IT companies because they are cash rich, right? And because of that, the downside is restricted. So maybe you're right, the numbers for the next 1-2 quarters will not look great, but chances are the stock prices will also not fall big. So this is my theory, and because of that, I don't have right now the IT stocks. I have KPIT. I just sold one day. I think at 770 I sold, right? So KPIT, we are completely out of it. So we bought it at 400, then prior to that 200, 160, 80. So we completely out of that, and now I'm interested in 2-3 IT companies, but not at CMP. Maybe 4-5% lower from here on.
Perfect, sir. So is that
maybe so to cut the long story short, maybe the earnings may not improve for next 6 months, but the stock prices will also not fall, because they will attract a lot of passive flows.
Correct. No, I 100% agree, because a stock,
this is the view I'm giving you from the big long side funds, right? So they are thinking that,
I agree. Yeah. I mean, see, dividend yield basically helps you, defining the floor of the stock price, because
yes,
at a particular stock price, level, I think the stock becomes attractive for funds, big funds, as you said. So that's a good point. So sorry, like just to the subsector in the IT, which part of IT do you like? Do you like R&D business, or more like on the normal IT service company type?
So I'll talk about the geography. Right now, I'm interested in companies which are doing some business in Europe. So you can easily make out 3-4 companies are there, right? And you do research further on, and then we will take it from there.
Perfect. Thank you.
Yeah.
Prince, you want to?
So Europe part of the business is looking good. Yeah.
So, sir, there are questions around the. I mean, as you were saying, banking sector is looking poised at this point in time. But do you see any segregation when you view private banks over PSU banks? And do you see any change in the pedigree of the PSU banks with clean balance sheets and good credit cycle going on?
Yes, absolutely. So normally I don't like PSUs, right? But in 2021, I gave lots of buy call in PSUs like Canara Bank, then your BOB.
Shashank, I cannot hear, sir. Are you able to?
Yeah, I can hear.
Okay, let's carry on then.
So last year I gave a lot of buy call on PSUs, right? Last year in 2021, and some of the stock went up. PSUs basically to 200%, 300%. Like in case of Canara Bank, I think from 120 it went up to 340, 350, and Bob also like from 70, 580 to 200 plus, right? So 150, 200% kind of a return they gave. Right now, what is happening? They are reporting absolutely fantastic numbers, and the further re-rating may happen. And one important aspect which people are missing, the FI's exposure to PSU banking stocks are still very, very low. And let's say they decide tomorrow to buy more into SBI or PNB, or maybe not really the PNB, Bank of Baroda or Canara Bank, and the float is already less. Chances are this stock may rally 15, 20, 30% in no time. So let's say Nifty remains at 18,000, but some of the PSU stocks may go up by 15, 20, 25%. So I continue to remain bullish on PSUs and private both as well. But right now I'm favoring little bit PSUs bank, right? Possibilities they may generate alpha over bank Nifty and Nifty both this year.
That makes sense. Prince, are you there?
Shashank, I cannot hear, sir, so I request you if you can ask question on my behalf. I will listen to the recording. Yeah, Ravindra, you can go ahead.
Ravindra, you want to go ahead?
Hello. Am I audible?
Yes, you are. Go ahead.
Hi, Prakash. Good evening. Thanks for sharing your insight. What's your view on AMC sector? All those 3, 4 companies which are listed didn't made any significant amount of money for investors since their IPO.
Which one?
AMC, asset management companies, SDFC, MC, Nippon, UTI, and Aditya Birla, all 4.
So
The thing I am asking, also wanted to know your view on. There were expectations that we would see an increase in ATC kind of limit, which didn't happen. And what government is now pushing is people to move towards a new tax regime, which will even reduce the importance of ATC. But on the other side, the ELSS as a percentage of AUM for any AMCs is not that significant. And if I see on the valuation side, they are trading at 80-20. If I leave aside only HDFC AMC, they are about 20 trailing multiple or even lower, which is equivalent to something like companies which trade in the mature market like US, where they 3-4% dividend yield and trade at 15-17 PE multiple. So what's your view on AMC side? And where you can see that EPS growth can come, because for the last 2-3 years they are struggling. Yeah.
Shashank, can you repeat the question clearly, right? Because I missed some of the parts. Because he's Ravindra. Yeah. So he's
Is the voice clear now?
He's asking about the view on AMC stocks, right? If I'm not wrong.
Yeah, AMC.
Yeah. So let me talk about the leader first, right? Without taking the name. So again, please, you have to understand that this is a very low margin business, right? So the margin is going down every day because of the SEBI regulations for asset management companies. And this is exactly like a broking business. We are every day, because of this passive, passive investing culture, your AMC charges will go down over the period of time. And if that is happening, then you have to pay the salary to the fund manager, then you have to pay some cut to the distributor and everything. So everybody is just, so you maximum you can extract 2-3% from the client maximum, and over the period of time it will fall to 1-1.5%. And in that you have to pay the rent, you have to do all kind of meets, and you have to pay bonuses, all those stuff you have to do it. So it's a low margin business, but if you still want to invest, then you can go with the leader. They are doing the return on capital employed of 36-37%, which is good. And again, if you go via that my traditional matrix, which is P plus F plus D, PFD. So promoter holding is around 63%, FIS holding is around 12%, DI holding is around 13%. So if you put together, this number will be somewhere around 90%, 89, 88%, which is good. So the float is less if you get any good news, and this budget is slightly positive for the AMC companies, right? Because this insurance so it's not positive for per se for the AMC companies, but because insurance companies will suffer, and that will be ultimate, they will get some advantage because others insurance will suffer, so the AMC will be the natural gainer from that bad policy for the insurance sector. So this sector got one small tailwind, and from here on maybe the sector may do well, right? So sector, and if you ask me which company I will buy only the leader, because the recent management change is also very good. Navneet is a very capable guy. He turned the SBI mutual fund absolutely. Now the SBI mutual fund did what you guys can easily see the performance of last 5-7 years. SBI mutual fund did really well. So I'm sure that Navneet is a very capable guy. He will be able to turn around this company. But I don't know how much money you guys will make, but margin of safety is there. You are buying a decent company at a reasonable valuation.
Thanks. If I may add, since we were talking about the life insurance companies, because of new regulation where they're above 5 lakh cumulative, it will be taxed. Uh, the life insurance company were saying they will do some kind of changes in the scheme so that you can have multiple family member and those kind of thing involved in the ULIP schemes. But what's your view, given the correction we have seen on the valuation side? I guess for the first time we are seeing HDFC life insurance, which is below 3 embedded value being traded. What's your view on the life insurance and particularly on the leader, which they said that there can be 10% erosion in revenue? What's your view on insurance sector?
Actually, I have spoken to a lot of top management people in these companies, right? And trust me, whatever they are saying in media is totally different, and what they are telling me is totally different, right? And just wait for 2-3 months, right? They may not feel any pressure till 31st March 2023, and after that you'll be able to get the real sense, right? And you track the lead indicator data from insurance sector, and you'll be able to figure it out. So I'm not going to buy any insurance company for next 2-3 months, to be honest. I'll wait for that. I'll wait for till 1st May 2023. So I want to see the April month premium collection data clearly, and then I'll make a thought that whether they are getting impacted or not. So I'm right now giving it a pass, though ICICI Prudential recovered a bit from the lows from 390 to 425, 430. But this HDFC Life is making new lows every day, and despite of on an embedded value basis and all those, they are appearing little cheap, but I think the earnings will be compromised big time here. So you really don't know what is the E part here, right? E is literally, the earning part is literally compromised here. So I'm not gonna buy. And if you wanna really die hard of insurance, fan of insurance, then you can allocate 2-3%, test the water, see where it is going, read about it, research about it, and then add on, right? So this, if anybody wants to have some allocation towards it, but right now maybe this sector is, for me, this sector is gone for 1 year for sure.
Right, sir. So there are questions around gas sector and logistics sector. If you have any view for these sectors.
Logistic is a very small sector. Yeah. Logistic, to be honest, couple of companies are doing really well, like Blue Darts and all, right? Blue Darts, VRL Logistic, these companies are doing well. But rest, I think TCI, I don't know. TCI reported, I haven't gone through the numbers, but TCI reported, I think, let me see. Numbers are not coming for this sector. I don't know. Barring 1-2 companies. Most of the companies are reporting decimal set of numbers here. And second is gas. Second is gas, correct?
Yeah, oil.
Right, sir.
So in gas, again, these utility companies and all these companies don't make too much money in long run. To be honest, I don't have a very strong view. I have a neutral kind of a view, right? So maybe Gujarat gas is appearing little cheaper, but I don't know. I'm not recommending to my clients. I'm not buying it. If you want to have a look, you can have a look on Gujarat gas, but not much. Not much.
Prakash ji, what's the dark horse right now according to you? क्या लग रहा है कि, I mean, which can turn around?
So railway is one sector where I am really, really bullish. So one can, so recently I bought a few railway stocks. I think I bought it on Friday, then I bought it today as well. So I'm buying railway stocks big time, and I feel that railway will do well from here on.
So in railway, basically, one side is the infrastructure building, contractual ones, and the second is mostly.
So I'm buying the wagon company, which everybody can make out, right?
Right. Okay, that makes sense. So and just like what makes you? Is it just the infra push on the budget that is making you bullish, or is there any other thing that you're seeing?
No, so again, the government is really, really serious about it, right? And I feel that in the next 2-3 years, railway is gonna create humongous wealth.
Just like the.
Yeah, more than defense, to be honest.
Oh, okay.
Yeah, because the market caps are so low, right?
Right.
You go and study the market cap of entire railway sector. You'll get to know what I'm saying.
Under.
In defense, you already have the companies with a market cap of 1 lakh crore or 80,000 crores, right? So if I talk about the defense, HAL is having a market cap of roughly 80,000 crores, so $10 billion, right? So in railway, you don't find such companies at all. IRCTC is not a railway company. A lot of people get confused with that, right? So it's basically e-commerce, consumer, 2-3. You can add 2-3 sectors, but IRCTC is not a railway company, or railway infrastructure company.
Right. And what's the second on your list, sir? Apart from railways on the dark horse list?
Capital goods.
Capital goods are ये बहुत बड़ा है sector. इसमें अगर like if you want to focus on what exactly? Like for example, are you more into the electronics manufacturing, or is it more like I mean.
Basically, equipment supplier to the EPC companies, or maybe in
Okay.
You can find out 2-3 companies from Delhi as well, right? They are doing well. You have to go a little deeper. You'll find. I think I have recommended one company, right, last year, and that is up by 70% roughly and thereabouts.
Right. Okay. Because I think this electronic sector, I mean, what's your view here? I mean, the local manufacturing that is happening in India. Do you think, because generally these companies operate at very low margins and they are more on volume?
So I was big time short on that in that company, right? Which you are talking about.
Right.
So that has fallen from 6,000 to 2,700. You are talking about that company?
No, I'm not talking any specific company. My main idea was like, do you think this sector in India can pick up? Like, this small electronic manufacturing, the chips.
Look, they can create a lot of jobs, right? They can give a lot of jobs of 20, 30, 40,000 rupees, but they will be not able to make substantial wealth for shareholders.
Right.
So good for the economic perspective, good for from the employment perspective, but they will be not able to create a lot of wealth for the shareholders, because as you said, these are very low margin businesses. 1-2 quarter here and there, certain miscalculation in terms of purchases and delivery, the entire margin will get wiped out.
Yeah, makes sense. I think Kaushik, you have a question.
Yeah, Kaushik and Satyendra, please make sure you ask question in a limited time and straight question. Yeah.
Actually, Prince, we have to wrap this in 10-15 minutes. because
Yeah,
I
got
have to go
yeah,
out for
sure,
dinner,
sir, sure,
right?
sir.
So I have to go out for
Okay,
dinner.
thank you,
Yeah,
sir.
yeah.
Yeah, Kaushik, quickly ask your question, please.
Yes, yes, thanks, friends. Sir, I just wanted to understand, you were talking about cap goods, and now with government budget, we know that it's been like very big infra and it's like manufacturing budget has come. So your focus is on mostly on auxiliary play or some clarity over here?
I just answered this to Shashank ji, right? So right now I'm focusing on basically the road construction and this EPC oblique equipment supplier, basically right now, and still my team is working on that. Maybe we'll be able to find one, two more subsectors, and we may try to highlight that on Twitter as well.
All right. And guys, like I have pinned a tweet so you can share your feedback, and for sure you will be benefiting from the views shared by Prakash sir, and you can write your feedback over there. So Satendra, you can also quickly unmute and ask your question. Yeah. Satendra, you there? Sir, Prakash sir, although you have already clarified, but again, there are many questions coming out like how exactly we should sail through the sideways market. What could be the best strategy so as to sail through it? Yeah.
Yeah. So first of all, you should be very sure that you are in a sideways market. And I mentioned this in 2021 September that we are entering into the sideways market. Once you're sure that you are in a sideways market, first thing you have to do is you have to diversify your portfolio. So in sideways oblique bear market, diversified portfolio will protect you. And if you are running a concentrated portfolio in a sideways market, the concentrated portfolio will destroy you. And you can see lots of examples around you, right? So recently, let's say you have allocated 15-20% of your portfolio in Divi's Lab. You are destroyed, one of the best quality companies in India, but the stock is down by 40, 45, 50%, right? So the concentration hurts you when you are in a sideways oblique bear market. So you must have seen with a lot of chemical companies, they have fallen by 50, 60, 70%, right? So first thing you have to do in sideways market, diversify, diversify, diversify. Second thing is try to do less future trading. Less future trading and do more options. So you have to do directionless trading, or either if you want to do it direction based trading, then do it with smaller time frame, because in larger time frame it might sound complicated, and because of that reason only trading is tough. So in a sideways market is more or less doing nothing in a larger time frame on weekly and monthly charts, but market may do hell lot on daily and 4 hourly on hourly or even on 15 minutes chart. So if you want to do the directional trading in a sideways market, then shift to the lower time frame. I'm talking about little higher end of trading stuff. So you have to understand. So if you want to do direction based trading, then switch to the lower time frame of 15 minutes, hourly or daily charts. And then you go for, if you are new, try covered call. So buy in delivery, sell higher calls, right, with the matching your lot size, or go for short put. So short put, absolutely. If you are bullish, you sell OTM put options, or ATM put options, or deep in the money put options, let's say. So just for an example, let's say I have spotted HDFC Bank breakout at 1630 rupees, and I know there is a cost of carry is also involved if I'm buying in future. So the cost of carry in HDFC Bank is, let's say, 7-8 rupees, which is 0.5%. So the cost of carry also kills you in sideways market. So every month you have to pay certain cost of carry if you are buying in futures. In case of, if I'm shorting DITM put option, which is deep in the money put options, the my in case of future, my cost of carry because I'm buying, so I'm paying. So for me, that payoff is negative. When I'm shorting deep in the money put option, my payoff is positive. So you have to ensure that cost of carry don't hurt you in a sideways market. So I don't know how many of you are getting this concept, but these are very, very powerful concepts. And because of this concept, I survived almost all the sideways oblique bear market. So I don't do futures trading big time in smaller accounts, because we run different strategy in different accounts. So any account which is below 5 crores, we don't buy big time futures in a sideways oblique bear market. So this is the one thing which can protect you, because just for an example, if you are bullish on HDFC Bank, let's say tomorrow, you have a view that in 1 year it will go to 1800, let's say, but your cost of carry in next 12 months in case of HDFC Bank will be 130 points or 120 points. So though HDFC moved 150 rupees, but the cost of carry took away major portion of the profits. So you only made 30 points in HDFC Bank in 1 year if you are playing plain vanilla futures. So either you have to go for covered call, or either you have to go for DITM short put positions, because these are large cap stocks, so they don't move 20% in a month. So shorting DITM put options, if you are a deep pocket, will help you to generate better ROI in sideways market. Then if you are sure that this stock is sideways between, let's say, 1500 to 1700, then you can do all sort of strategies like straddle, strangle, or maybe bull call spread, whatever you want to do it. But don't play futures in a sideways market, because the cost of carry will kill you.
Right, sir. Sir, quickly, I would ask, like, there are two questions. One is around alcohol companies, any view if you carry, and AC and white good manufacturer companies, if you have any view.
So actually, I have posted a negative view on this entire consumer and white goods sector 2-3 months back, if I'm not wrong, Prince. And after that, all these Voltas and all those companies have fallen a lot, right? Now, I'm viewing this sector as a, like, maybe I buy, let's say, tomorrow Voltas, and it may not do well for next 3-4 months. But after that, because of the low base effect, the results will look good, and these stocks may recover 20-30%. So I'm right now, in next 1 month, I will become bullish on white goods sector, or basically the AC manufacturer and all, right? And second one is
Alcohol companies.
extremely positive. Though McDowell reported a very terrible set of numbers, but Leader has reported a very bad number. But I feel other companies are doing well. So you must have observed one, I think second or third largest company is close to the all-time high, if I'm not wrong. The company name is Redico. So closer to all-time high, if I'm not wrong. Yeah, 1230 is the all-time high, or maybe 1300. Right now we're at 1180. So couple of companies are really breaking out from the basis. The stock is very expensive, trading at around 65p. But I think this sector will do well for sure. So but again, you buy for 2-3 years. This is not like a trading bet. You need to buy and hold for 2-3 years, because valuations are not cheap here. None of the companies are trading, none of the good companies are trading below even 40p. So I don't know if you guys have gone through the McDowell valuations. It is again a very expensive company, but the story is good.
Great, thanks. So, sir, I would request concluding remarks, and additionally, like at Plutus Advisors, who can connect with you. I mean, you have been very vocal about it. The people who are low ticket size need not spend money, and that's very appreciable. I have seen this is very rare, because when somebody is into selling their services, they often are not clear to the. But take my thanks for that.
So, Shashank is here, right? So Shashank itself, he is a big investor, right? And he asked me what is your offerings. I clearly told him it's absolutely free for you, right, Shashank? If I'm not wrong.
So you're very very humble and honest, and I think this is very commendable at your stature.
So please guys understand, money is not everything for me. I'm here to make money for sure, but for a small investor, like if you have 5 lakhs or 8 lakhs, what is the use of taking my services? No use, absolutely. Because in a month I generally speak about 2-3 stocks, and they do well, right? More or less. So that is sufficient for you if you have a small capital. If you have a bigger capital and you are looking for a professional advice and proper risk management, then you can opt for it. That's it, right? I don't want to talk about the details of the products and everything, right? So if you have a bigger capital and looking for professional advice, then you can opt for Plutus. Otherwise, my tweets are sufficient for you to manage small capital.
Exactly. And thank you so much for your time, and apologies for your dinner being get.
No, absolutely, right.
So kind of you to agree to my request, and sincere thanks from our attendees, sir. Thank you so much.
Thank you
Yes.
so much, Prakash, and we will definitely hold another session on your knowledge on the quantitatives, because वो miss किया अभी time की वजह से, लेकिन next time.
One last line, please, guys. Whenever you are investing, please open screener.in or stockage, some free websites. Go and check at least the basic valuations. And what are the basic valuations? Only 3 things you have to check. After that, you can buy. One is interest coverage ratio. If the interest coverage ratio for any company is below 3, you should think twice before buying that company. Second, if the company is having ROC, which is return on capital employed, less than 14%, you should think twice before buying that company. Third thing, if the annual growth of that company is less than 12%, which is lower than India's nominal GDP, you should think twice before buying that company. Fourth thing, these are the 3 minimum. This is basic. And fourth thing, even if promoter is your friend, let's say, even if Gautam Adani is your friend, don't put more than 20% of your capital in that company. I have seen everything in this stock market. Over allocation do kill you. Don't leverage. Trade with your savings, and if you are younger, take little higher risk. If you are like approaching 50, 55, 60, take very low risk. That's it, and you will be fine. You will be absolutely fine. You will make, surely you'll be able to make 10-12% kind of a CAGR minimum, only with these 3 ratios. And if you manage your leverage well, and you don't leverage, don't borrow and invest in stock market, you'll be able to make decent money. God bless all of you. Yeah, please.
Great. Thank you again, sir.
Yeah.
Thanks
Good night.
for
Good night, Prince. Good night.
Good night.
Good night, Shashankji. Good night.
Good night. And for our attendees, you can share your feedback, and if you are getting benefited, you surely should write to us. That gives us a satisfaction and obviously a motivation to help you more and more. So with this, I take everybody's leave, and thank you so much, Prakash sir, for your time, and surely we will have you again as and when time allows. Thank you so much. Good night. Take care. Thank you, Shashank, for handling, and great.
Thanks, friend. 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 Thanks, friend.